Hello, it's Brad Laurie, or Blockchain Brad, and today I'm honoured to speak with a company that is making moves right now on the blockchain. It's known as Finxflo, or FXF is the key token to know right now. A lot of the topics are being discussed all across DeFi, but this one's changing things up with CeDeFi, bringing together what's happening in the mainstream and in the decentralized context of the blockchain. Now, there's all kinds of things we need to unpack and explore, but before we do, it's important you know that this is firstly a very transparent discussion. It's also one in which you need to know I'm invested in this company as well for the long term. Now, gentlemen, thank you once again for being here. Let me introduce you firstly. Now, we have the co-founder and CEO. His name is James Gillingham. Thank you, James, very much for being here.
No, thank you for the invitation.
You're welcome, mate. And also, I'd like to thank Matt Page as well. He's one of the key members of the team, and he works in terms of the institutional aspects of it, particularly with regard to sales and making sure everything's done by the book. So thank you, Matt, once again, for being part of this conversation as we learn more about Finxflo.
Pleasure. Great to be here.
Now, as I explained, guys, this is all about being transparent and being real, cutting all the BS out and getting down and dirty, understanding exactly what this company represents. So let's start a little bit with, before we go into the title and what it represents, what was the agenda? What was the reasoning? What was the problem, the real world issue that you needed to solve in order to build this company?
So, well, number one, it's a fantastic question. It's a question that many people ask, and essentially I was the key driver behind the idea. So I'll just give you a little bit of color around that. So I've been a trader for many years. I've traded particularly Forex, FX trader. I've worked in hedge funds. I then was creating and setting up various FX brokerages. Now, whilst I was working at one of these brokerages or setting them up and managing and essentially getting them running, I had some employees at the time, and one of my employees back in 2012, 2013, he actually came up to me in the office and said, "Hey, James, have you heard of something called Bitcoin?" I was like, I have no idea what that is. He said, "Well, me and my friends, we're now coming together. We're going to buy some. Do you fancy buying some? Do you want to come in with us?" And I was like, at the time I had some money, and I'm pretty much a high risk kind of guy. I enjoy going into lots of different businesses and putting my money on the line and really pushing the boundaries. So I was like, okay. There you go. There's some cash. We invested in empty docs, in Mt. Gox, and we had our Bitcoin there. And that was really as much what I really thought about it. At the time, I said to him, "Hey, Mikey, it's rubbish. It sounds rubbish to me. The only reason why I'm doing this is because of our relationship. Like that's the only reason why I'm investing." Then obviously Mt. Gox and empty Gox, it got hacked. I lost the coins. But ever since then, I was always watching crypto. So I was also developing fully automated trading algos. So algos like trading primarily euro dollar. And then I started trading crypto. So I started signing up to various different exchanges, and I wanted to buy and sell Bitcoin, going to Ethereum, etc. This was about 2016, 2017. I started trading quite actively. And then obviously being a traditional world market trader, coming from Forex, I want to get global price discovery. So I want to be able to obtain global best price and get top of book. So what I then realized was, okay, I've got my multiple screens. What I would do is set up with multiple accounts, and I'll start trying to trade. And essentially I was looking at multiple order books. I'm trying to hit the bid and the offer, or the maker, the taker is what we say in crypto. And I'm trying to hit that, but I couldn't hit it, right? It's getting really, really frustrated. So at that time, I was like, look, is there any aggregation out there? Is there anything that's able to aggregate the order book where I get global price discovery and always hitting top of books? I'm getting a much better price for my crypto, because if I'm trading through one venue, I only get the liquidity that's in that one venue. I don't get to see the rest of the market. So at that time, I was like, look, I got frustrated. I saw that there was Tagomi that was kind of building something. They were institutional focused. When I was also trading, I was trading, getting a lot of partial fills. There was a lot of what I classed as slippage. There was a lot of fictitious volume out there. So there was all these market inefficiencies that I was getting really, really upset with. So at the time, I was like, right, that's it. I'm done. I can't find the aggregation model. I can't see it anywhere. Nobody else has built this. So I'm going to build it. So essentially,
Well, let's lead into that. So sorry to jump in, James, but obviously that's the leading question for what you essentially have built and what you are as a team. Now, you're known as the world's first hybrid liquidity aggregator. What's interesting and I think very important to acknowledge is that you came from seeing something with your expertise that needed to be in this industry. So it was utility driven. It wasn't a case of let's try and create something, let's find something that isn't out there, but you actually looked at the problem first. And I think that is not always the case in crypto. As you'd appreciate, there are some who just want to manufacture tokens for their own sake. Now, let's discuss what it actually means. So world's first hybrid. We want to unpack this, the hybrid aspect, the liquidity aggregation, what it means to be that liquidity aggregator, that one-stop shop for, essentially making sure that we can source that liquidity very easily and seamlessly. How are you set apart? What are you? And, and essentially, what do you do?
So we're a hybrid liquidity aggregator. Essentially, we bridge both CeFi and DeFi together and package that up so we allow new investors and older investors and traders to move into the market in a much more secure way. So essentially, we have regulated and insured custody of all assets. We have regulation here in Singapore by the MAS. We're also acquiring regulation in Europe and regulation in America. We're slightly different to our what's seen as today as really our competitors. Because we're not a DeFi protocol. We are a real business that's been set up to be able to bridge into both DeFi and CeFi world, giving much deeper pools of liquidity, so that when anybody's trying to execute within the market, they have much better pricing and depth of book.
I see. I want to ask you both, gentlemen, what's your view on those in the space, in crypto particularly, who argue that it's DeFi or nothing? We hear a lot of maximalist narratives with a lot of diehard fans of the DeFi agenda. Now, obviously, in the sense of CeFi, we're talking about a huge, number financially when it comes to the market share there. So what's your argument when we hear these things, or what's your response to those that, argue there should be no CeFi in the context of the conversation?
Well, it's a very interesting argument, right? I mean, in a pink cloud, right? And the way that crypto was born and created was distributed ledger technology, where there's no KYC, there's no AML, right? Now, what that particularly means is that's a very niche market. So that's a market where the governments are not going to allow crypto to become one of the world's most actively traded financial instruments. The reason why I've come into the space, or the reason why I moved into the space, is I want crypto to become the #1 financial instrument. And the only way that that's going to be obtained realistically is by having KYC, AML, travel rules, so that we're not financing terrorism. I don't want to finance terrorism. I don't want people to be buying drugs or any illicit activities. I would like to really tidy up and clean up the space so that it does become the #1's world, the #1 instrument that is driven by real institutions, by real people, and of course the smaller retail guy that has been involved for so long can also extrapolate a lot more value, because when it becomes more governance around crypto as a whole, the price is going to triple. You're still going to get the same ripple effect, but it's going to be a lot more secure. People aren't going to be losing as much money as what's happened. There's going to be less hacks. So, for instance, when we're speaking to regulators, we have to go through a code review. So we have penetration testing. We have all of this kind of stuff. Now, what I keep on seeing, especially within the DeFi space, is that people are rushing to list the protocol, and the amount of hacks and the amount of people losing funds. So governance in certain ways is actually very good, because it means that people are less insecure with their hard-earned gains.
Well said. And obviously also from a top-down standpoint, when we're looking at regulation, that gives you some peace of mind as well, knowing that in years ahead, decades ahead, you're going to be supported from these parties around the world, from these countries that are all heeding the value of the blockchain, particularly right now, and finding ways to work with it rather than against it. Now, obviously, you've explained the importance of liquidity aggregation, but why hybrid? What sets you apart? There seems to be some sentiment that you are different to others that exist out there. So, how again do you in this very fast-moving landscape, showcase that you're unique and that you can offer something that other liquidity aggregators can't?
So we're extremely unique because obviously everybody that onboards with us will have to go through KYC, AML. We essentially know everybody that comes onto the platform. Now, the underlying pools of liquidity, which is either DeFi or CeFi, we allow the accessibility into these markets in a safe, secure manner. So the funds essentially will always sit within our regulated and insured custody. So the funds don't have to move into a protocol where there's a potential of a hack. The funds don't have to move on to a centralized exchange where there's a potential of a hack. We actually place margin on each one of these counterparties, essentially protecting the market participant by always staying within the FXF ecosystem. So whenever you execute a trade, essentially you execute, but it's the company's funds or it's the pooled funds that we have from our farming, from our liquidity farming, that's placed on the liquidity partner, and they are at risk. So, for instance, OKX, for instance, when they stopped operating for a month, that can never happen with us because we're aggregating multiple pools of liquidity, 25, 30, 40. All we will simply do is carry on trading like normal, and when that particular centralized exchange then becomes available again, we will then move our funds out. The same as with the DeFi aspect of things. If funds are moving into the DeFi space, whether it's lending, whether it's borrowing, whether it's loans, these kind of more structured products, that I like to say for the DeFi space, we have strategic partners that are already aligned, that are also been pre-vetted. So what we're doing is we do due diligence on all of our partners, all of our DeFi partners, just to ensure that the security of our entire ecosystem is protected. We will never put our funds or anybody else's funds, for that matter, into anything that could or could not expose ourselves to potential losses.
Right.
On that.
Yes, please do.
One important feature that we all know is an issue with the multiple exchanges that you register at is all this platform is going to be one KYC, one account, one wallet. That's really, really important to know. So it's almost a one-stop shop, right? You can go in a safe, secure environment to Finxflo and get access to all that. You're not going to have 20 screens open, having funds on all different exchanges. Coinbase goes down, OKX is shut off. You're stuck. That's not going to happen.
Yes, and that service provision, as you mentioned, to use your own words, that one-stop shop, but even just having that one access point where I don't have to go and access every other entity out there, that's already a value proposition in and of itself, beyond all of the other things we'll be discussing today. Now, I guess the other thing I wanted to ask you, gentlemen, was why do you feel that you can achieve potentially the pole position? If it's such a competitive space and if there are competitors out there, and yes, we've discussed how you are hybrid, but how do you surpass what is being done and achieve the goal of being number one?
So number one really comes down to the technology, the aggregation, price saving, essentially. So again, by coming directly to our platform, if you would sign up to an underlying exchange directly yourself, you're going to be treated as a retail customer normally. Because we have institutional relationships, by signing up to FXF, you're pricing automatically your execution. So we always have the priority pipe. So most exchanges, they don't really explain this to customers or when you're signing up, but they have two pipes. They have a priority pipe and a less priority pipe. We are always plugged into the priority pipe, so we get instant execution. We have direct market access. It's called straight-through process, so we're never going against our clients. So right now, you will see a number of exchanges that stop pricing when there's a large volatile move in Bitcoin. They just stop pricing. That's because they're market making or they're taking the other side against their clients. For us, we're purely STP, so we're straight into the liquidity partners. Now, what that also means is for us, as we aggregate these liquidity partners, we're also policing them. So as we police these liquidity partners, for instance, as I mentioned earlier, like there's lots of wash trading, there's lots of fictitious volume, there's lots of these kind of things that are going on, right? Now, when we're trying to hit the maker or the taker fee or the bid or the offer, we're trying to hit it. If, for instance, that particular liquidity partner doesn't give us a full fill. So if we're not filled fully, so we get, say, a 10% partial fill, we will then send them a message within our aggregation engine saying, hey, you're not filling us. So clearly your pricing is not correct. So that's warning number one. Warning number two, warning number three, and then we will stop pricing them in. So we will stop allowing these guys to, for instance, you go onto CoinMarketCap, you see the amount of volumes that they're trading, but very rarely are they trading anywhere near the volumes that they are purported to report.
Exactly.
In the CoinMarketCap. So we're also here to kind of police the whole by aggregating all the liquidity partners. But then obviously price discovery, we also aggregate non-exchanges and non-protocols. So we're also aggregating people like market makers, which are very, very important, which the wider exchange community never talk about, but they always put this in. So for instance, we can get much better, more aggressive pricing for all of our clients, and that will be obviously not widening our margins. We will be passing that on to our underlying clients essentially. So everybody's going to be making savings when it comes down to execution, and you're going to be getting more bang for your buck. So if you've got 10,000 USDT, you'll be getting more Bitcoin for your 10,000 USDT than what you could on any other venue. So our pricing is going to be a lot stronger.
Got it. And we are going to talk about the fees as well. They are really competitive, I noticed. But what's great in hearing your answer is that you're appealing to those who want the legitimacy and transparency, and not so much to those who don't. And that, again, because we're moving in that direction of strengthening and increasing, intensifying regulation, you are perhaps one step ahead of that in terms of providing a service and a platform that is in sync with regulation and what's happening in the future, which will be more and more CeDeFi, we would imagine, or open finance. Now, one of the statements made, again, is that one connection sort of point of service, so much more than just the protocol. We discussed the CeDeFi aspects, but the security is something I wanted to talk more about. Now, you mentioned earlier about custody, and I've read through the literature, and there's suggestions of partnerships there to strengthen that security as well. Do you want to touch on that and how you're making sure that we can feel safe using your platform and making sure that there is custody that's properly built in?
Sure. So the number one concern of any regulator is custody, right? So when you're acquiring regulations with a regulator, they're like, okay, the number one thing, who's looking after the funds, right? Is it you or is it another counterparty? So we have taken that big bulk of our business and we've placed it into regulated custodians that are fully insured, and obviously they've completed the penetration testing, the code reviews, they made sure that they're super secure, but they're also regulated. So then we instruct via our clients on the transfer of funds. So the client will come to us. You will then say, I want to move X amount of Bitcoin from this wallet to that wallet. That's all tracked, traced, and fully secure and insured, which is super important, because even if there was a hack, which is highly improbable, it's not impossible, but it's highly improbable. The reason why is because we have something called MPC, so multi-sig technology. The biggest actual concern for anybody realistically isn't really the hacking anymore, because the hacking isn't so much prevalent because the technology's evolved. What is a lot more or a larger concern is actually like with MTGOX, where people internally within the company collude. Yeah. Right. So the collusion of, say, the C-level. So CEO, CTO decide to run off into the sunset and say, okay, let's transfer $100 million worth of clients' funds into our own wallet. Right. So within our custodian, you have whitelists. These whitelists are obviously the underlying exchanges or the liquidity partners that we're with, and whitelisted wallets which come directly from the clients. So we can't internally go and whitelist my own personal wallet and transfer funds out. Not only that, because it's a fragmented key, the fragments are given to us as well as the custodian. So the custodian has a fragment, we have a fragment. So that also protects the clients as well. So that they know that we're not holding all the private keys. We then get hacked. They then have to, the hackers would have to be able to hack, or for me to be able to transfer funds around, I would have to collude with at least, like, to send a transfer of over $100,000. I would have to collude with 3 or 4 people internally within the company.
I see. So it's essentially institutional level and institutional grade security built in that you'd expect from any fully fledged business, fully established one. And I think that as we build more of this understanding of open finance, many more in the DeFi sector will arguably come to understand that imperative of having different actors within the company itself, make sure they only have partial access for even more enhanced security as well. Because rug pulls, we've just seen them a dime a dozen for the reasons that, again, they don't have these built-in systems to enable users to have that peace of mind and enable people to experiment with what is, this hybrid liquidity aggregating platform. We want to make sure that we can play in a safe space. So it's good to know that that's legitimate and that's real. Now, with the KYCAML procedures, I understand that they're well built in, but do they apply globally? I wanted to understand more of the geography and applications here because you referenced Singapore. I wanted to perhaps expand on that, and also where your vision is in terms of who can participate within the space, within the world, and also how will it progress to the US, since you mentioned them as well.
Sure. Yeah. So the KYC and AML covers everybody globally. It doesn't matter who you are, or if you're an institution, or if you're a retail participant. We have to conduct due diligence. We have to conduct KYC and AML, address verification, photograph identification, verification. We have to run sanctions checks. We have to check that there's maybe Osama bin Laden isn't trying to sign up to the trading platform, for instance. Because of global regulations, there's OFAC countries. So there's certain countries that you cannot sign up to. This may be North Korea, for instance, Iran. These countries are unable to gain access to the platform because that's international sanctions. The rest of the world is pretty much open. You mentioned the US. The US is the FINRA and SEC is a very important strategic move for us. We feel that America is a fantastic market for us to move into.
It's big business for you, James. That's why I wanted to ask you what your plan is there.
Yeah, so we've just opened up a New York office. At the moment, it's very, very small. So there's a one-man office at the moment, just whilst we're acquiring the regulations. So we're undergoing SEC and FINRA licensing right now. Okay. Once that's been completed, so we're getting a broker-dealer license. Once that's been completed, we will then move into a BIP license, which is a New York State license. So in America, it's slightly different than anywhere in the world. There's a federal license and then a state license. So we are getting both licenses concurrently. It will probably take around 9 to 12 months by the time we're completed. We've actually been in dialogue and been speaking to both FINRA and SEC. After having conversations with them, we are able to operate in America from April once the platform goes live. However, we will only be able to use non-security backed coins. So security-backed coins are more the stable coins, so it's USDT, USDC. We will not be able to offer that to Americans. However, to Americans, we will be able to offer Bitcoin against Ethereum, for instance, the normal crosses. We've already spoken to FINRA with regards to a list of security-backed coins and non-security-backed coins. So we're guaranteeing that we're not in breach of any of their regulations. But currently, whilst we're operating April, May, June, July with the non-security backed tokens, we are requiring the licenses, and we're hoping by Q4 to Q1 2021, we will then be able to obviously acquire the licenses, and we'll be able to offer all of the pairs.
I see. And what I really appreciate hearing is that you're making sure that you do that due diligence country by country, especially when it comes to the US, because they are so rigorous, especially now also with all of the things that have come out regarding stablecoins. And on top of that, we see those differentiations between different states. You mentioned New York. That's also for someone who's a researcher in blockchain. It's appealing because it's the most rigorous state perhaps in all of the US. So obviously making sure you cross your T's, dot your I's is really important right from the get-go, and I appreciate that. So thanks again for that answer. Now, I wanted to talk to you about the team I often tweet out that without the team, without the tech, you have nothing right from the outset. Your skill sets are very broad in your team without trying to promote any of them. I wanted to hear from you, both of you gentlemen, your view on the skill sets of different people in your team, particularly those firstly in that core team before the advisors, to understand exactly why you chose them and what they offer to bring together what is an effective team to push this forward.
Sure. So something I was very cognizant of when I was creating the team and constructing everybody, I wanted every angle covered, right? So because I've already created a bunch of other companies in the past, I know the kind of team members that I need. It's not only just having the talent, it's having the right attitude, it's having the right people within the team, because you can have a really, really talented superstar that upsets everybody, then the team is still not going to perform, right? Mm-hmm. So we have to make sure that we actively work on no egos, right? We don't want any egos in the office. We all work extremely hard. We bring out the whiteboard. It doesn't matter who's there, but constructing the whole team together, like myself, I come from very much a trading background, analyst. That's my kind of background. Then I have Thomas as my CTO. I've known him for many years. He's an amazing coder, developer. He's sometimes very short with his answers, as many tech guys probably are. Right? Yeah. He's not the easiest to get along with. But he's absolutely amazing when it comes to security, from constructing things in his brain, the way that he and I, when I first came up with the idea, we would sit in a room, we would whiteboard for hours, and we would come up with all the ideas on how all the various integrations and all the moving parts of the platform plug in together. So I couldn't have wished for a better co-founder.
I see. I just want to jump in there. What's interesting is you sort of alluded to a time long gone by. So how long have you actually been building this with Thomas and with the team?
So I would say the first idea came around 18 months ago when I had the idea. Thomas and I actually met at one of the expos, mm-hmm. and I sat there and I said, "Hey, I've had this idea of creating an aggregator. Do you think you can build it?" Right. So that was my first thing. Like, can you build this thing? And being a tech guy, he's very honest, like brutally honest. Right. Mm. He's very French, so he says, "Oh, James, this is very easy, very simple." So I was like, "Fantastic, that's absolutely great. So how are we going to do it?" So we sat down, we mapped everything out. We started drawing things out, and then he was like, "Okay." Then he starts working out the tech stack, how he's going to build it, the aggregation engine, how that's going to be built, because it can get very, very, like in a granular level, it can get very, very, very technical.
Yes, and to be honest, it's good to hear that that's been happening for some time, because obviously you would appreciate that, as you alluded to before, some startups in the space or some so-called team members, they launch things far before anything's even ready, and it just doesn't make any sense. So having that those tech members having worked on it substantially before now, it really matters to, I think, myself and many other listeners. Now, just to reiterate, obviously your experience as well matters. Multinational company experience for you, James. 13 years in many different industries, company builder, built your own companies. Thomas, has his own degree in computer systems as well. So I did check those things, and he also has worked in the past in sort of tech areas as well, and had a lot of experience in trading systems. Then you have the commercial aspects, and you also have the legals. Do you want to just quickly touch on that for your team, and then we can discuss Matt and what he does as well?
Sure. Yeah. So the commercial aspect is Liam Jones. He's currently the Chief Commercial Officer. The reason why I selected him was that he's also built up a bunch of companies. He was a trader. He's been a trader in many tier 1, tier 2 investment banks. He was an FX dealer. He was a chief dealer. He's been head of desk. He comes with so much experience when it comes to just trading in general. That's where I wanted him strategically as like a commercial, but like commercially, he's built up a number of companies. He's sold them to ASX listed companies. He's merged, he's bought, he's sold. He's built everything up from the scratch. And that's where I really needed an older commercial head. He's been around in business for about 35 years. So he's very, very, very experienced. We're generally a young team. The average age is anywhere from like 35 to 42. Mm. He's now coming up to almost 60 now. But he comes with so much. It's very important to have like an old Yoda, somebody that kind of calm, collected, and gives us advice, something coming from a slightly different angle, not something that we can generally see. But he says, hang on, guys, I've been through this before 10 years ago, and this is what I'm advising to do. And it's very, very interesting to have somebody like that on the team. And then that to Gregory Ranslam, who is also older, actually. He's mid-50s. He's our chief legal counsel. So he's now obviously dealing with all the regulators and setting up the entities globally around the world. But he come from strategically from Millbank Tweed, as well as some other Wall Street Wall Street legal firms. So he really made a name for himself in America before he moved to Asia. So he has a broad range of understanding from both European as well as American and Asian regulatory oversight, as well as the legal frameworks in each one of those countries. And because he works on Wall Street, he understands capital markets, he understands this inside out, and he's a very, very good, cool, calm, collected character to ensure that we have all of the relative protections legally that we require to take us to the next level.
Well, that's good to hear. Obviously, for the most part, everyone we've discussed so far is really focused on that mainstream, really having had that experience in that area of finance or business. You hear a lot less of the crypto emphasis, which I think is going to put you in good stead, because essentially you're crossing the bridge, or you are the bridge between the two worlds, providing that liquidity aggregation for all participants, and crypto is just simply the tool. Now, what about you, Matt? What's the main focus in your role, and what do you feel that you really can bring to the table in terms of really, being an outstanding participant in something that perhaps the others aren't?
Yeah, so we've got such a broad and deep breadth in the institutional side. I come from a slightly different side. I come from an industrial side. I've spent the last 22 years in industrial sales, lots with oil and gas, mining, commodities, but it's always been technical solution based. I've managed teams all over the world, different territories, South Africa, India, Middle East, Asia. I've lived out in Singapore for the last 6 years. And I became a macro convert. I went full macro. I took some time out from work and went deep into the macro space, and came out with two theses, which was some of the precious metals, more on the supply side, because I have a lot of experience in that, and digital assets and cryptocurrency. And then I had the same journey as James did in how to get onto these platforms, and how much of a steep learning curve it was to have multiple, I think I was 13 different exchanges, different wallets, different accounts. You got your ledger. It's just a nightmare. And you could see the potential, but you couldn't have that one account, one wallet, one KYC, one platform that could get you what you needed. I've talked to a number of my friends who, obviously being in Singapore, there's a lot of institutional people around. Most people work for the big banks, all just behind us here. And a good friend of mine, who's actually coming to join us in April as a compliance officer, said, you really want to talk to James. He's solved this problem. And I went deep down the crypto forest, very, very deep. And I found myself explaining to very, very bright people who managed lots of money how to use Uniswap and MetaMask and the whole world that has come out. And I see myself as bridging that gap. I know we talk this a lot about the institutional space and that knowledge and the learning curve on how to get into cryptocurrency.
So in many sense, you're the people representative of a bridge. You're making it possible for people to understand, firstly, what is crypto, and then helping them understand the relevance of this in what you're building.
And I come from my own journey, so I can speak at all levels and gone through all of the challenges. And what we've built is truly groundbreaking, I believe. And that's
absolutely.
James is very influential in that decision, and the team that we've got is very influential in that decision.
And what's interesting also, that world's first title that is in the slogan. Are you confident, gentlemen, that it is a world first?
Yeah.
Yeah.
Because this is where it becomes a game changer then.
Yeah, I mean, look, we were looking at some other protocols that essentially have been launched, but we are the world's first regulated hybrid liquidity aggregator. There is nobody else in the world today that does exactly what we do.
And does it surprise you though, James, that it hasn't been done before? Because crypto's been around now for some time. We've had an influx with the ICO boom, we had so many different coins and startups emerge and almost saturate the market at times. Does it surprise you with the need for clearly a liquidity aggregator like this, that it hasn't happened before to 221?
Well, no, it doesn't really surprise me because I feel the guys that really have the knowledge or the expertise to be able to build this and have this kind of ball in their brain or even see that there was a problem, right? These guys normally work in the institutional world of the traditional world, right? And most of these guys, like when I speak to my traditional world friends, talk about crypto and they're, oh, it's a scam, oh, it's rubbish, it's this. So these guys were not even involved. And as this industry evolves more and more and more, they will realize the opportunity that they missed. So essentially, I was very open to anything. Whereas a lot of these guys that have a lot of money and they've been very successful in the traditional world, they would always downplay and say, oh, crypto, it's a scam, don't get involved, blah, 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 blah. Now they're opening and now they're realizing, oh, actually, I made a big mistake. So yeah, it really doesn't surprise me that this hasn't, that the idea hasn't been executed the way that we're doing it before, because essentially the experts that could have been able to view it were not viewing it because they were just downgrading crypto as though.
And now people are paying attention to the blockchain more importantly and all the technology beneath it. Those engines are firing. So perhaps that institutional expertise is the new narrative now. You know, that's what's really going to uplift the integrity perhaps of the overall crypto system. That is, you know, what we call that crypto space, because we have people like you building legitimate startups for the future. So finally, the advisors, this is an exciting development you have. I won't go into them because of time, but clearly the skill sets are there. And for those who'd like to know more, certainly go to the website of Finxflo, research each of them, make sure you do know that exactly what each of them bring to the table, right from things like economists, expertise in the blockchain in terms of launching, entrepreneurs, CEOs, from people who've worked as CTOs and exchanges. The list goes on, educators, corporate experience, high-profile thought leaders. So again, if you'd like to know more, make sure you go and check those advisors. But I'm assuming from you, James, based on what you said from the core team selections, it's the same again, that you've really focused on different people who can bring to the table something that collectively is going to be effective and powerful.
Yeah, with the advisors, again, it's not only just about their expertise and having a differentiation between their expertise and subject matter. It's also having a blend of various personalities as well, because some people are a lot more like myself. I'm a lot more risky, or I take the riskier road. But obviously, to get a much more rounded approach of any business, you need to have the less risky guys. You have the medium risk guy and the guy that's totally risk adverse. And then from being the CEO, you can listen to all the views instead of just seeing one myopic view. So that's something that was very important to me, to not only have just different skill sets, but also different views of risk appetite as well.
You got it. Now, one that does clearly have a very, I guess, well-established risk appetite like you is Coach K, or better known as Joel. I do apologize for his surname. I'm not exactly sure how to pronounce it, but let's go with Koshoff. I'm not sure. But with Joel, obviously, I've texted before through Twitter. I know of him as Coach K. I discussed this pre-interview. It's impressive that you have him listed, because it's very transparent that he has that experience in the crypto space. As a marketer, as someone who knows the ins and outs of this very peculiar dynamic, what have you learned so far from someone like him in terms of the importance of making sure that's in the discussion? Because as you alluded to before, some do play it down, or they speak pejoratively of crypto in some mainstream sectors, perhaps not understanding some of the key marketing imperatives to really build up awareness of different startups. So what's the importance here of having Joel, and what's his role, and what are your thoughts on marketing more importantly?
Yeah, so Joel's been absolutely instrumental to the success of FXF from a marketing angle, a marketing standpoint thus far. He's really guided me because when I was coming into the cryptocurrency industry, obviously I come from an institutional world of finance and banking, essentially. Moving into cryptocurrency, it's totally different. Totally different. So what he's done is he's imparted all of his knowledge on me and basically guided me, and sometimes said, well, James, no, actually that's not going to work. These are the reasons why it's not going to work. Actually, you should do it like this. And he's very good with ideas. He's an ideas kind of guy. So I'm also an ideas guy. So we work together very freely and openly. And he's really stuck by the project. He's done fantastic. I'm very pleased, lucky, and blessed that he's been a part of the project. Only last night, we've actually grown very close as well. So we've got a very good personal relationship. So last night, I sat there talking about personal stuff and having a laugh and a joke. But that's one side when it's extremely important around business, around tokenomics, around marketing, around infiltrating the crypto arena in a safe manner and ensuring that we gain maximum exposure. Joel really has been absolutely magnificent.
Got it. Because one of the reasons I ask is that there's a lot of trust in working with someone within this very complex space where there's a continuum of quality from, the worst of the space right across to arguably the most transparent, the most genuine, the most willing to support long term. So it's obviously imperative that people do their due diligence to protect the interests of their company. So do you feel like you've done that when we understand that the role of those advisors in the crypto dynamic is to help support the network, to help use their own network to build out connections with key parties and stakeholders that are only going to enrich you? So do you feel that that's something that Joel can offer, is to lead out that transparent representation of what an advisor should be?
Yeah, correct. And he's also brought on a lot of his followers and lots of people that follow him. They have actually purchased the FXF native token, so he's put his name to FXF. Not only that, but his advisory tokens are essentially vested for a very long time. So he's he's shown through his actions that he's in the longevity of the project. Right. He's advising for a few months before we launch, and all of a sudden he cashes out and he's gone.
I'm really glad to hear that, because we are going to talk about those vesting, but thank you once again for making it clear that the pump and dump is just not possible for those advisors, which many people do want to know. And we'll talk also about people like me, for example, who've invested in the private sales, making sure that there's full transparency about what that means for the future of this, as you essentially develop liquidity for yourselves when you do become listed, and that token's then suddenly that key and core utility token to drive your vision. Now, with regard to the features, that's perhaps one of the more important things, because we go back to the tech to understand not just what you stand for and what essentially your title is and how you differ from everything else as that first mover, but how you are built and structured to be able to say that. Now, you have firstly that exchange aggregation engine with a full depth or order book. Do you want to just touch on that, and then maybe even for, I guess, to speed things up, go across and discuss that global order book nature where you can actually have multiple order books working in sync with one another without the complexities of having multiple wallets?
Yeah, so essentially what we do is we pull the top of book from all of our pools of liquidity providers. Let's say there's 25 liquidity pools. We will then take top of book on each cross, on each instrument, financial instrument, and we will put them into one order book. And then essentially that global order book will be condensed into one order book. And then you've got top of book from all individual books that will then be fighting against each other to whoever has the best global price. Right.
Okay. So once again, it reduces it back down to that one-stop shop. One-stop shop as an order book. Now, in that also you have the Finxflo smart order routing to affect the best bids and offers. So I'm not sure if you touched on this before, but do you want to, I guess, expand on that?
Sure. Yeah. So basically, we have what's classed as TWAP and VWAP, which is time-weighted average price, and volume-weighted average price. So this is smart algos. Essentially, what happens is if you're going to sell, say, 10 BTC right now. So you have 10 Bitcoin and you want to sell them. Now, if you're selling 10 Bitcoin through one liquidity partner, maybe top of book is 0.4 Bitcoin. Second in line from spot top of book would be 0.6, 1.2, and you're going to slip all the way down the order book. So what we do automatically is, if you're firing off, say 10 Bitcoin to sell into USDT, for instance, right? Mm-hmm. We will take top of book from all of the multiple liquidity partners. We will take, say, 0.6 top of book from LP1, 0.4 from LP2, so you're getting a much higher average price rather than slipping down the order book in one venue. So anybody that's trading larger sizes is going to get a much better average price by going through us, and we will slice that up and we will put it at top of book across all of the liquidity partners.
Right, okay. Well, that makes a lot of sense. Again, it just makes it more efficient. And then you've also built in the advanced features beyond just having, as Matt said before, that ease of just that one point of access for everything after that. You also built in things like, more in the blockchain speak, fault tolerance, low latency, very fast process. So, and also you've got the horizontal scaling. So a reference point that's known in the sort of tech speak is the elastic, I guess, approach to building out the nodes so that you have more efficiency built in. In that context, how did you build this out? I mean, who were the key devs that made sure that these provisions were possible? Because when I look at the team, there's not a lot of people that seem to have the blockchain experience. Are there more people that we're not aware of in the team, or is this predominantly Thomas?
No, it's predominantly Thomas. However, Thomas does have a team that we structured around him. Mm-hmm. University that he went to is probably the top university in the world for development. So he has also hired a few of his guys from the same university that they all attended. So they've all done complex options and derivative pricing for major institutions or French institutions, top investment banks. So they all filter through the same process. So that Thomas understands that they all have the same knowledge and the same aptitude. Because the most important thing, or not only the most important thing, but the most difficult thing that we're actually facing right now is actually hiring the right devs. It's a very, very difficult process, because if you have certain devs that are up here and then you've got another dev that's down here, they just don't integrate into the team. So it's actually been a major challenge for the company, which is hiring the right developers in order to ensure that we continue along the same vein of building the #1 trading platform in the world with elasticity, and ensuring that we have a low latency co-location with all of our liquidity partners to make sure that execution is as efficient and as fast as possible.
Got it. And obviously as well, James, that's in the test phase now because you're not yet live. But that's also what I wanted to ask you about with regard to the UI and the UX in the testing phase, in the experimentations, in the feedback. What's happened so far that you can disclose in terms of the performance, in terms of your satisfaction with the position and state of the platform interface now?
Right. So where it is right now, Thomas and I, probably about a year and a half ago, we started looking at the UI UX, right? The user interface and the user experience is very important, especially from this is something that we believe is very special. So we've got tech aspect and we've got a business trader aspect. So we came together and we created multi-screen charting. So right now, if you want to trade across multiple different trading pairs on one screen, you can. So there's two screens, or there's 4 screens that you're able to trade off, as well as one-click trading and integration there. So if you want to be able to trade at the click of a button without entering in multiple screens, obviously you want it to be ease of access to the liquidity. It's just literally one click. We also have drag and drop, and there's also within the UI UX itself, we're going to be able to amend charts, amend the actual trading platform itself, and you'll be able to save your profile. So when you go back, all your P&L boxes, any kind of key information that you want to be able to see, you'll be able to save that within your profile. Now, right now, we do have the demo account that's already live. So you can go to finxflo.com, you can sign up, you can start trading on the testnet. So we also have something that I noticed, which I really wanted coming from FX and from the traditional world, was I wanted to be able to allow people to demo trade without risking real funds. Because when I was trying to learn how to trade crypto in the market movement, I had to keep on pulling real money in. I was like, this is ridiculous. Why is there no demo accounts? So we've actually integrated within the testnet. So all you need to do is sign up, create a faucet. You can then upload your TETH or TBTC. You can also plug in your algos, your scripts. You can fire off, and you're not worried about losing real money. You just fire off. And that's something which I'm really passionate about, as you can tell, about bringing to the market where people don't have to risk real funds. They can come and trade and use the UI UX, execute, especially for the newbies, right? So for the real retail, they're a little bit concerned and worried. You don't be worried about signing up to an entity. So you sign up to us, and you can demo trade without risking any of the money.
That's a really good point. And when I looked at the website, I noticed that demo link very quickly as well. So it's quite easy to find. And you even have screenshots for people to get a bit of a picture of what that platform does look like, that UX UI. And I guess I wanted to allude to the question of, are you as a team happy so far with its overall design, based on obviously the feedback of the internal users and even those who are playing around with the current demos that exist? Surely you're getting feedback through your social channels as well.
Yeah, so actually, to our surprise, because our expectations are here, but in order to obtain that, time equals value equals money. So it takes us time to get to this level. The feedback has actually been like absolutely fantastic. They're like, wow, we love the UI, we love the UX, we love the multi-screen charting. But the general consensus within the team is that we want to improve this drastically. So we're not going to stop until it's absolutely seamlessly amazing. Where we feel it is probably 20% capacity to where it will be after another 6 months to a year of us developing and pushing.
You got it.
We've also just hired another UI UX guy. So he's now joining. He's working through the various integrations that we've got. We've got a bunch of partnerships with DeFi, loaning, lending pages that are going to be integrated within the website. It's all going to be totally changing within the next 6 months, but we anticipate that it's going to be absolutely amazing. I mean, the whole point of us building this is to be the best. Like people say to me, "Oh, did you move into crypto because there's great upside with money?" I've always explained that the money, like I don't really care about the money. I just want to be number one. I want to be recognized as someone that changed the crypto industry and the way that people trade, and giving people accessibility to the depth of liquidity and a much better user experience than what you could get anywhere else.
Perhaps the side effect will be the money, I think, James, because if you do this right, the money will flow, quite literally. Now, with regard to the token, this is where it's a roll the sleeves up kind of time, because often CEOs don't like discussing, the very clear design of that token. They like to sort of just nuance it in a vague and ambiguous way. But let's not do that. Let's not sugarcoat anything. Let's find out exactly what the true nature of this is. What is the legal structure of this token as well? It's said in the literature it's a utility token, but I wanted to get it clarified from you as well. What specifically is the token, and what does it do? What is it for?
So the utility token itself, the FXF native utility token, is integrated into the platform. It has a lot of utility, so it's able to reduce trading fees. You're able to stake as well, and you're also able to farm. So by farming, you will give essentially FXF within our smart contract, Bitcoin, Ethereum, Litecoin, whatever it is. We will add that as margin to our underlying liquidity partners, and you'll be given FXF as a reward. You can also stake FXF, so we have a staking mechanism where you will be given compounding rewards for staking your FXF. And then obviously, in order to reduce trading fees, we also have it integrated very, very similar to BNB, where you're able to execute, and you'll get a much tighter spread, much better, not execution, because we have best execution principles across everybody, no matter if you're holding the token or not, because that's part of regulations, but you will get a much tighter spread and lower fees.
Got it. Okay, so clearly utility token by classification. You've mentioned numerous reasons for that, which we needed to know. One of the things it does say is that you're a token that represents a natural blockchain 3.0 asset. So what does that mean when we talk about blockchain 3.0?
So I'm going to pass that one to Matt.
I think that's, in my view, interoperability is the zeitgeist at the moment. Right?
So Web3 essentially.
Yes.
Right.
I think that's where the TRON element links in, and is obviously it is used a lot in whatever your viewpoint on it. It's got a very low cost, and it's used a lot in different markets, China specifically.
Mm-hmm.
So, dual node interoperability.
Well, can we backtrack for this, Matt? I want to talk to you about this. So for those who are not aware, FXF, that's the token ticker, it's used simultaneously for 2 different blockchains right now. Is that correct so far?
Yeah, that's right. It's going to be launched on ERC20, okay? But then when we get to revision 1.5, it will have the dual node with TRON, so TRC20 and ERC20.
Okay. Now, I have to say, I very rarely talk and say that word TRON. It doesn't come up in a lot of my circles. But again, that transparency is what we want to hear. Now, those in much of, I guess, the US and many other parts of the developed regions of the world, they may not be aware that right now TRON is synonymous with China, for example, in terms of applications, users, etc. And as you'd be aware, it's a controversial title. A lot of applications are used, as I understand, for gaming, that sort of thing, like literal casino gaming. So do you want to talk a bit more on that and give us some confidence in terms of the assessment you've done, the due diligence you've done for TRON, and why you've integrated that?
I think the key to it was to open up different pairs that aren't currently available and cater for a large part of the market where we're sat in Asia, which hasn't got access in a regulated platform. So we all know the issues with TRON. I think that's widely discussed. Having that TRC20, lots of executions done on TRC20. Money's moved on TRC20 a lot. You know this, Brad, right?
I do. A lot. Especially because it's China. I mean, everything happens on steroids over there in crypto.
Exactly. So as James has already gone to depth on in terms of the custodial side and all the AML checks and the whitelist of the wallets, all of that comes into play. We're just using it as a token that offers additional pairs, because if you're coming into our ecosystem, the fact that it's using that TRC20 or ERC20, again, it's more like a utility than, oh, it's TRON. It's actually opening up the utility for it.
And what's interesting too, sorry to interrupt, but as you're explaining this, I'm thinking, well, this token almost acts as an agnostic token because you're starting with 2 blockchains. You're starting with essentially two tokens represent those ecosystems. So is it possible to branch out into more?
Well, good question, because we are actively discussing one of the hottest topics in our industry, which is DOT. Okay.
Yes, I'm a big fan.
Yeah, exactly.
Go parody.
Exactly, we all are. So just because we've gone with TRON, TRC20, ERC20, interoperability goes beyond 2 pairs of that. So we're very keen to progress DOT.
It sounds like you're not telling me everything there, which I appreciate. Obviously, sounds like there's discussions being had right now, and I would anticipate there'll be even more with other platforms in the future as well as the time arises. For example, with Cosmos, they are well known, well respected, and then you see the likes of Near Protocol coming in the future quite strongly, arguably. So there's a lot of potential there for you, but it is important to pull it down into the truth of that token design, because we've seen the influx of governance tokens, and many of those have been questionable actually in what they actually are by regulatory standards as well. So you appease the top-down regulators with the utility design, and clearly you can reference and evidence that pragmatically through what you're building. Now, one of the things that is, I guess, another unpopular topic that needs to be disclosed clearly is the distribution model, the token allocation model. Now, do you want to touch on that, gentlemen, more and what you'd like to? And I'll just sort of interject if there's any other things I think need to be added. But in terms of from the private sale, the allocation model, what you think is, the value proposition in your design that you came up with and put forth.
So the major value proposition is that we have had no seed round. We haven't had round A, B, C, and D, and different prices to different people. And then essentially normally what happens is the retail guy that gets in at the end gets dumped upon a VC that's purchased at a seed level, right?
Right, exactly. And the risk is just so immense as you move up.
Yeah, correct. So we have one round. We've actually turned away a lot of VCs because they were asking for preferential treatment, and I said no.
You should have disclosed it. I would have helped you.
Yes. So I basically said no to anybody that wanted better pricing. The price has been 5 cents for the token for the private round or in our public round, which will be coming shortly on DEX.
Mm-hmm.
The unlocking mechanism is going to be exactly the same for the private round or for any of the participants. We actually changed because there was a 25% being unlocked per week, day 1, day 7, day 14, and day 21. However, we understood that our partnership with Polkastarter, that the Polkastarter participants were actually going to get 100% on day 1. So we can't allow that to happen. So what we've now done is that we've now unlocked everybody day 1, 100% of their tokens.
Okay, now just to interrupt, I mean, obviously that includes me. So in full transparency, I am a private sale investor in this for the long term, and it's important you know that. Now, I didn't even know until talking to you today that was the case, to be honest. I wasn't aware of those changes. So in that respect, are you concerned, gentlemen, about the risks of pump and dumps? So say, for example, in my case, that it's unlocked immediately in 100%. Are you concerned of what the private sale investors can do as a result of that?
No, because for me, I want to know where the price discovery of my token is pretty much immediately. So after having all tokens unlocked, it then means that we get that price discovery. We know where we are. We know the valuation, and from there we can build. As a CEO, for building a long-term project, this is not like a smash and grab. I'm trying to pocket a lot of money for myself, because that's not the case. So for the view of a CEO that's looking for a long-term project, I want price discovery, and then from there I'm able to build from that price discovery. So allowing investors to cash out, because I believe that the private participants that have purchased tokens should be able to cash out some of their cash, because they're put faith in us.
Mm-hmm.
I want them to cash out some cash. And then obviously I'd like a larger majority of people to see that we are a long-term project, and they will hold for the long term to see how our price will appreciate. Shortly after listing, we're going to have a lot more announcements, or a lot more partnerships, and then shortly after those partnerships have been announced, we will then move into the product launch. And then from there, there'll be even more utility. People are going to be buying those tokens to reduce their trading fees.
Right. And to add some peace of mind, obviously the private sale investors and that partner you mentioned in the partner sale, they're the only those receiving those 100% unlocks. And then from that point forth, there's very strong lockups for those parties that are essentially in the team or associated somehow directly with them. Now that's important, and people can go and check those, because you're very transparent in the information on the website. And I'll certainly put some links below for that. But I think, once again, being myself as one of those investors, knowing how crypto works, and also I've been in this situation once before where I did invest in one that had very quick price discovery, but that was a legitimate entity. That was actually, I'll disclose this was Arweave. This was a very respectable platform, and the price discovery had to happen rapidly, and it tested all of those investors actually. So for me personally, all I can say is that there is a strong rationale behind hodling, because yes, it's great to see that some can exit if they want some of their holdings, but the real value hasn't even come yet, because as you build out this platform, as we start to showcase what you can actually do, that's where everything moves with it. The price, true, arguably, you can't say that, but that's the assumption, is that price comes with utility. and with functionality and with fees. So again, I encourage people to really explore what those set periods of time are, from 18 months through to 48 months for those lockup periods. But once again, you trusted people in that private sale a great deal. And I really appreciate, once again, that transparency to tell us exactly what the nature of that is, which is that 100% unlock for that small percentage.
Yeah, so we were going 25%, as I mentioned, day 1, day 7, day 14, day 21. However, as I mentioned previously earlier on during the interview, the fact that we have to live by our community. We love our community very, very much. We're actively working for them, essentially. So together, they help us and we help them, and we are community driven. So because we are community driven, we don't want anybody to have any advantage. So even the Polkastarter participants and our own community that have partaken within the private sale are all 100% unlocked.
Really appreciate that, gentlemen. And reputation's an asset. You obviously value it to be able to disclose in this way. And it doesn't happen with every CEO, with every team. It just doesn't. So once again, we appreciate that greatly. As I said before, if you'd like more information, make sure you check out the website, and it will tell you the times when different unlocks take place, all the way through to a 48-month vesting period for the team itself, which is those who have the most faith in what they're doing, gives us confidence that they aren't the pump and dumpers like we've seen in the past with some rug pulls and dodgy teams out there. Now, with regard to the live aspect of the technology, I wanted to ask about that quickly. You mentioned April is a key point. Do you know roughly when that's going to happen? And then from that point forward, do you want to touch on some of the things you're excited about with the roadmap?
Yeah, so April is, it's probably going to be mid-April, to be honest. That's the area that we have a roadmap which is built by tech and devs, and we get to see like a Gantt chart, and we get to see what they're working on and what's being progressed and what's being moved, because everybody within the office is about 30 people in the office, and we tell them don't bother development, don't speak to tech, don't bother them, because if not, we're every single time you ask them a silly question, it pushes us back slightly. So we're very cognizant that obviously when we say anything to our community or to anybody, we want to stick to our deadlines, right? Because I've seen so many projects that turn around and say, oh, we're going to be launching here, and they never do, and then a year later,
we've all been there. We've all invested. I've invested in some that took years and still didn't list in the end. So we really appreciate that. And I did have a look at your roadmap online, and you've really listed just a few key dot points that you want to hit as milestones, but it hasn't been this really detailed, over, I guess, zealous approach. So once again, people can go and check that out, but I appreciate the transparency with that. And hopefully as you, you come to more concise plans, you'll update us through the different social channels of what exactly you're planning on doing that is doable based on prior achievements and successes. And gentlemen, one of the things that perhaps is a key value add for you is your fee. When you do contrast this with others, you're only a 0.01% fee on each transaction, as I understand. Do you want to just, I guess, inform us more about, I guess, as a pitch to us, why it's beneficial for us to go and transact and use the platform?
Yeah, so essentially it's as what I mentioned before, it's execution, it's speed of execution, it's pricing, it's how much capital that you require in order to purchase the asset itself will be less using us rather than going directly to any other liquidity partner, whether that's an exchange or a protocol. We anticipate that we have much larger depth of book. So what that means is if you're a larger trader, you're executing larger transactions, you'll get a much better average price. We have, as what we mentioned before, the smart algos, and essentially much deeper pools of liquidity. We also have other areas which you just mentioned about the roadmap. We are building in copy trading. So there's going to be a copy trading module. There's also going to be a money management module. So you'll be able to go in and you'll be able to borrow, lend, and essentially stake. We also have a money manager or a dealing desk. So we're building and developing our own proprietary algos. So if anybody has or wants to access world's top crypto traders in algorithmic trading form, and they want their crypto managed, they will also be able to come to our platform as a one-stop shop for all of this in order to be able to extrapolate any value. So if you've got a few Ethereum and you want that managed, then you can have a copy trader.
Wow.
or a money manager.
So you're not really going to finish up as just that first mover as a hybrid liquidity aggregator. Clearly, you're going to be fully bootstrapping a very robust financial platform with quasi bank services, essentially, you know, or nuanced as such with different financial applications to allow us to experiment there. I mean, the potential of this, if this is all going to interrelate with FXF, the potential of that particular asset is going to be exponential, I would argue, if it's going to be moved beyond just simply this one very significant platform that's going to have huge market share. So you must be excited about the scope of this. I mean, it's huge.
Yeah, I mean, to be honest with you, sometimes I sit there and I pinch myself. I'm like, wow, is this really happening? Right? Because when I was sat 2 years ago in my underpants, like drawing out, mapping out how are we going to build this out, and I was certain that what I was doing was perfect. And at that time, there was many people saying, "Oh, it'll never work. It's rubbish. What are you doing? Don't waste your time. Go back and work in a hedge fund." I'm like, no. I know what I'm doing, and that belief. And now I've got to this point, and I was like, yes, I knew that this would happen, and now it's coming to fruition.
Yeah, it's exciting, James. And just to interrupt in that sense, I mean, you're clearly excited about this. You clearly put the hard yards in. But what about those people standing by you as partners as well? Can you tell us a bit more about those who caught on to the vision, understand what you're building and seeing synergies? Because we see, obviously, with Coach K and other supporters in your team, they would be building out important alliances and important relationships with key stakeholders in crypto. But even beyond that, are there things that really push the value beyond the narrative to prove that there are some serious partners in the mainstream even that are paying attention to what you're doing?
Yeah, so we just looking at the shareholders of the actual company themselves, when we came together and we were obviously paying up the capital for the company, they all had to believe in the project, because if they didn't, they wouldn't be buying shares in the company because it's worthless. And I'm very, very lucky that there were guys there that were obviously understanding on what we were looking to achieve. They couldn't see the vision because they're not really the visionary. That's more like an entrepreneur. That's what the entrepreneur can kind of see, right? But they're buying into the fact that they are backing me and backing like the idea and backing the whole company. So for that, I'm actually extremely grateful.
Right. And what about future partners in terms of just building out the platform that it shall become? You know, because you're going to need some of those parties to really engage with you, to support you. And then when we look into the internal structures of crypto, we know things like exchanges come forth typically, or we see partnerships with other crossovers with blockchain interests. Often they are a narrative push, as you would appreciate, but sometimes you see legitimate partnerships emerge. So in that context, can we anticipate either mainstream partnerships for real utility or within the scope of the crypto space as well?
Yeah, so we are aligning now with about 8 or 9 strategic partners. 2 of them are more DeFi focused.
So who are they?
Once it's signed, we will be having a co-collaboration and an announcement. And then we have a bunch of like centralized partnerships as well, which will be announced probably within the next month.
Okay, so it sounds like sexes and dexes to me, things like that, where you start to really create that interoperability and that alliance to support, you know, essentially what you are. I'll look forward to the call when, you know, there's a time to announce some of those things, and excited for you on that. Now, the white paper, I have to say, gentlemen, I wasn't that impressed with the way the white paper looked. It looked like it was a bit of a high school job to me. I've read a lot of them, but I guess the question goes back to you. Were you happy with the white paper itself and how it was designed and laid out and, you know, relatively simple in its information?
No. There we go. Full transparency.
Okay.
Right. From my point of view, I've read a lot of white papers that were super techy, right? And I didn't want to have this super techie white paper that probably 0.1% of the entire world's population can pick up and read and understand, right?
Right.
I wanted there to be a white paper where you can pick it up and download it. And it's an easy read. It's really digestible. You can read through it and go, that's what we're trying to achieve. Because when I first started this process of explaining to people without a white paper what I'm trying to achieve, they'll go, I don't understand what you're trying to do.
Yeah, I think that was about 90%, to be honest, of crypto. I had that feedback the same. It was almost pitch deckish, you know, in the way that I read through the white paper. That's the vibe I got. And I think I appreciate what you're saying, because it was very easy to read. It was easy to understand, but it didn't have that same nuance of an academic paper as you tend to see in 2017, 18. So thank you for clarifying that. Perhaps I was a bit harsh on that, you know, just that point, but I'm just not used to that. And I wanted to raise it directly with you, because I thought, well, who wrote this? Firstly, was this the work of the team, you know, the tech team of Thomas? It doesn't appear to be something Thomas would write.
No,
That's right.
No. Thomas didn't write it. Thomas is the kind of CTO where he's like, give me a computer that works really efficiently, give me my code and let me work, and don't disrupt me with anything else.
Yeah.
Whatever, just let me do my job.
Right. And in the end, gentlemen, the code is what counts. Let's be real. And the white paper is the guide. It's the information. It's the direction. So do appreciate that. And perhaps you're changing the narrative. Perhaps people are going to do more of that pitch deck approach in the future that makes sense to the majority who really just don't have much knowledge of what essentially is that hybrid liquidity aggregator anyway. So yeah, again, thanks for clarifying that. If you'd like to know more about the white paper, make sure you do click on that link that is available on the website. Is there anything you would like to add on the white paper note before we move on, gentlemen?
No, I'd just say that there's a partnership deck as well, which is broken down even simpler.
Okay.
So you could call it a white paper light, if that's the right term. But that really is it's a slide. It's really easy to digest.
I see. And perhaps maybe later in the future, there'll be like a yellow paper to explain the platform itself, but we'll see if Thomas has time for that. Other than that, it'll all be just tested by proof on, you know, through the operations.
And one thing that we are is very close to going live, right? We're not creating a white paper to get funds in to create the platform when it turns up in a year, 2 years' time.
Yeah, no ICO approach there. Yeah, I appreciate that. I think it's just more to get a picture of, you know, to get some text that reflects what you are.
And a lot of the white papers we've all read are there to get funds, right?
Right.
That's why they're there. So we're sort of a little bit different in that respect, being self-funded up to this point, and we're just having a little turbo boost from our very soon listing to when the platform goes live in mid-April.
And gentlemen, I forgot to ask you as well, how much did you raise? I read the amount in terms of token value, but I wasn't sure when we talk in the context of USD, for example, what was the target there for you to raise effectively?
Yeah, the 54 million tokens, all at 5 cents. Everyone's on the same playing field. So that's 2.7 million.
Okay, so you weren't raising, you know, in contrast to some that have emerged recently, it's certainly not the largest raise out there. Why was that the magic number?
Simply because the shareholders and everybody that basically put the capital in to begin with. When I first started the project a few years ago, the whole point of this was for us to build and develop the platform without requesting lots of money from people. We wanted to get far enough along in order to build out the business and the company to make sure that we don't need these numbers. I wanted to limit the exposure for us as well. I want to keep a larger portion of tokens that are available to us in order to make sure that we get the most value out of the actual trading platform itself. So I want to make sure that we don't need 600 million or 1 billion tokens, right? I wanted to have a much smaller amount of tokens, so the actual power of those tokens is essentially a lot higher. So we only have 150 million tokens.
Yeah, and that's not a lot. I mean, we've seen very low total supplies with, like, for example, the likes of YFI. a very strategic, tasty tokenomics, I called it, when it was first developed, or when it was first released, with all the interest in its reward mechanism. But again, perhaps that would be far too small for the scope of something you're building. But when we look at the broader context of previous token supplies, this is relatively small. It's actually quite small. When we see, for example, we've seen 100 million happen before. We've seen nothing unusual with Bitcoin, even with the 21 million. So there is very few number when it comes to the total supply of this.
Yeah, and that was very, very important, that we could extrapolate the most amount of value for everybody, whether it's the team, whether it's the participants, whether it's the private sale participants. We want everybody to make a good return on their investment, because for the team, essentially for me, it's not only the investment in the infrastructure, in the platform, in the token, it's investment of time. Well.
Yeah, well, reciprocally, I really hope that, obviously, because you're part of the team, I really want to see that token has value for you at the end of that 48-month period, because ultimately it's you doing the most work as the team. That's the reality. I mean, it's one thing to have capital, it's another thing to be there building. And hopefully, I'd like to encourage every single person who has been privileged enough to be invited into any of these rounds to make sure that they are committing to some of that long term. Because that's the whole point of crypto, is to make sure we co-build this industry and make sure legitimacy is at the forefront of where you put your money. So I know what I'll be doing, and I do really encourage those others to really think about that. Now, when it comes to access to information, to make sure we can go and learn more, or we can interact more, where can we go to learn more about Finxflo?
So there's a bunch of different channels, which I'll let Matt answer, but we have a bunch of channels.
Yeah, so obviously Telegram is the de facto for crypto. So if you go to our website, all the social media channels are on there, even Facebook and Instagram, but obviously the most active community is under Telegram. Please link, subscribe, like us on Twitter. We've got an active community. I think we're coming up to 3,500 on our Telegram channel.
Yeah, it's moving quickly, I've noticed.
Yeah, it's growing. I did an AMA last night, and we had another 500 people join. So our Twitter is very active Telegram community. Love to see you there. Lots of the team are on there. We're open. You can see that from how we're speaking. We love to have that touch point with the community. Mm-hmm. A lot more AMAs in the coming weeks as we're getting close to the listing. I'm not sure when this video goes out, but Friday the 29th, if that's when this comes out, then great, because we'll get a date of when with the Polkastarter whitelist and the DEX offering will commence.
Yes, and I saw some information tweeted about that recently. So, it's important that people are aware there are those access points for that. And as you said, it's exciting to hear that the listing's coming up in the future. And no doubt from that point forward, things are really going to roll out. The way that Coach K operates with his, with his team, with his marketing prowess, things will be moving, no doubt, in his network to make sure you're well supported. Now, gentlemen, is there anything you'd like to add to this? I had some other pressing things I wanted to ask, but it's been a long interview. We can always touch base later to just discuss things like, for example, fiat on ramps, on and off ramps, customer service, all those things that actually do come up in some of the questions that are available on the website. So once again, make sure you do check those out. So gentlemen, is there anything you'd like to add, perhaps, that really just cements the value of this, or even if you want to add some more objective things that you want to say that just sheds the light in what you're building, but also shows that you're real?
So you mentioned something that's very, very important, actually also sets us apart, which is customer service. So right now, many exchanges, or what I class as liquidity partners, but exchanges they just have almost zero customer service, like what I class as zero. Something that we're building out right now is essentially a customer service module for the whole company, where we'll have telephone support for anyone that's trading. Any traders who have any issues at all, there'll be 24/7 support, customer service support, that will support all the traders globally, wherever you are. So that's something that we're really trying to home in on. Because when I was doing or completing due diligence on other venues, it's terrible. We just want to kind of like service all these different areas that others are not currently catering for.
Fantastic. So, obviously for those newbies as well, it's going to be really important when they're struggling perhaps through just the basics of it, that they can go to someone 24/7 and it's a real person. So really appreciate that, James. What about you, mate? Is there anything you'd like to add, just, as a final statement, that you think perhaps we've missed anything, or you want to make an objective statement about something within the scope and plan?
As my brain was getting engaged, and I thought there's one thing that we have skirted around, but we haven't fully talked about. The smart ordering algo is proprietary in-house.
Right.
That's our tech. And with that, there's the dark pool. So we've got like institutional grade tools that are available to everyone. So
you do have some that's open source.
So no, in terms of the dark pool, meaning that if you're putting in, $1,000 worth of BTC or $1 million, you're going to have access to the dark pool. Now, what it does is stop front running, which so when James was talking about the wash trading and the other things that are going on, and how the TWAP and VWAP will split into child orders and go to the top of book, that's not visible, right? Because it's in the pool. And as people that might not have come from the institutional space and how they used to gaining access to this liquidity in the platform. There's a reason why institutions go through brokerage, right? Liquidity, they can get in and out. And the dark pool is normally reserved for a select group of people. That's why it was created originally. But we're giving everyone access to that. And that's that fair trading policy that we talk about in our literature.
That's fantastic. And, one of the things that you said is so true, and that is that the wash trading is a huge problem right across the landscape. I mean, the actual numbers just don't match up with what's actually happening. So in many respects, you cleaning up the space is actually going to give us a lot more confidence in the future of this industry through these kinds of platforms you're building. So it's almost ironic, but it has to be done. And I'd like to see it be done well and with teams with experience. So, gentlemen, thank you very much for explaining that in this first interview, all the fundamentals, all that starting point that we need to know to have confidence in the future. I will be honest and say from this that I'll be certainly looking into perhaps even increasing my position in this, because it's all about making sure we do support long-term startups, not these ones that are trying to rug pull us or confuse us or try to, pump and dump, at our expense. So congratulations with where you are going on this, with what you've achieved so far, and all the best for the very near future as you do start to showcase, I guess, the first step, which is the token launch, and then most importantly is that live launch that does come forth to showcase the platform itself. I'd like also to acknowledge all the parties who are contributing to your team as well, because obviously they all make it all possible for what you are achieving. And if you'd like to know more, make sure you do go to the links below or check out the website. I'll provide what I can to learn more about Finxflo. But until next time, thanks for staying tuned. It's Blockchain Brad signing off. And once again, gentlemen, thank you very much for your time.
Thank you.
Thanks.